Maximus Analysis here for July 25th, 2016. We have continued just sideways for today. Nothing crazy. Again, I think that, again, the trade is not now for the long side. I think that they could easily pull it back once they break below 2151, which would be the weekly close. 2151. Oops, let me get this sorted out. 1 second. All right, let's go to 15-minute. You can see they're holding. They broke down a little bit today. Nothing crazy. Again, I want to see them get below this 2151 area, which you can see here is last week's low, or that they're around. You can see it right around here. Yeah, so this is last week, and again, they break below that. We'll see what type of price action they have going on. Again, you can see that the price action has really pulled back. Again, some people would say that this is a head and shoulder pattern, and maybe. But more I'm looking about is that, again, we were up so many significant weeks. Again, this is why a lot of people don't look at the weekly chart, but I'm like, you got to look at the weekly chart a lot of times to make sure that you're not chasing, because right now they will easily squeeze it back below the 2151 area and get to the 2134 area. They probably will go back below it, because I guarantee you there are a bunch of people that got in that are having that put their stops right at that point. If you on my newsletter 3 weeks ago, I told you not to buy gold. I said it's going to basically pull back, and if you missed the trade, that's fine. Let's look at it and let me explain to you why I said that. Okay, the reason why I said that is because, again, if you're in here, maybe you got here, or even the second week, okay, you got through Brexit, but now is not the time to just blindly get into the trade. You might say, listen, it might pull back a little bit, but again, if you're trading the future, or if you're trading the ETF, the GLD or the GDX, why take the unnecessary, heat for a month? Well, not even a month, about 20 days. Why take it for 3 weeks? Okay, when you said, listen, I will wait for another trade. And usually that happens to a lot of people because they don't have a strategy and they think that there's only one move and they need to get it. Don't think like that. Okay, they could pull it back again. This is 1300 right here. I said I have on my report another level of 1287.50 that they could get to easily, which will squeeze a lot of the shorts out, and then you take it to the upside. So again, this could be a small flag. I've looked at, they'll test the 200-day moving average, probably break down below it, because once they get there, again, you know that there's obvious stops put there from people that just went long for the breakout. That's why I don't like trading breakouts. And understand that with a breakout, there'll always be a retracement. So I want to make sure that you have that same type of philosophy and thinking when it comes to the ES. So let's break it down to the ES on the daily chart. You can see it's just, again, sideways. We have to continue to see that once they break below this 2151 area, you can see that that's the low from this date, the 19th. And then after that, it's, I think that they could easily get back below to the breakout level, because it's just that easy to get people at this time. The upward overhead resistance is 2184.50. Let's look at the NQ. NQ on the daily. Again, we see that they're still holding their pivots. Again, we'll look more on the weekly chart, and we can see that this pendant has been broken. But again, the volume is lightened up. So again, I'm not chasing it, because again, very simple thing is, where is your target? And you can say, my target's up here. Okay, well, if your target's there, where's your stop? My stop is back here. I bet you your stop wouldn't be one for one. And what's the point if you're not going to get a stop that's 1 for 1? Let it retrace a little bit, even if it gets down to this 44.75 area. Then you take that and put your stop below a defined area, versus you're not putting your stop there. And if you're trading the QQQ, it wouldn't be really that good of a trade if you're going to trade the QQQ as well. You're going to take a $10 risk because you don't want to miss out, versus saying, all right, I missed this, and there'll be another trade. Crude is flirting with some very significant levels on my side of the fence, and again, I have levels that I'm showing right here, which is 43.12, and again, 38 is a critical level. Of course, 40 psychologically is a level to stay above, but again, I will look to see where they close this at the end of the week, because I still have this pattern of the inverse head and shoulders that you're seeing right there right now. You have TLT that, again, might be setting up for a little bit more upside potential. We'll see after such a small 1 bar down, but again, it's have a hammer at previous resistance. Previous highs. So again, we'll see if they're going to layer and go into that type of deal. Now, this week is going to be a kind of there's a lot of earnings this week. So again, you have Apple that again is shaping up really. We'll see what happens. And those earnings are tomorrow. You also have Facebook. That's this week, which again, it's still looking okay. I just don't like this pattern for such a long time. That's why I'm passing. You have Amazon. Again, I think it has hit its target already, but I'm not thinking that things are going to go bad. But I'm not initiating along here because, again, after such a move up, I'd prefer to get a deeper pullback, quite honestly, before I go take a long on that. Plus, if I'm in it already, if I'm in a long, I would roll my options. Meaning that I would sell what I currently have, buy a cheaper one at like a whatever delta, and then I'm locked in the gain. So if it gaps up, I'll make money. If it gaps down, I've already locked in my profits. You also have Twitter and Google as well as McDonald's this week. So be prepared. And I think you also have Fed talking at 2. When wouldn't they just be quiet? Why don't they just be? Why do it seem like they talk every stinking week? Because not only do they talk, they put out the minutes, and you're like, which one is good? Like, is it the minutes or not, or what's going on? But again, we'll see what happens. But again, I'm watching this crude. I'm also watching the dollar to see how that one is faring out in regards to the price action. Price line is kind of like really a no man's land, and these are the reason why I've not kind of looked at these, because price line is just sideways, sideways, sideways. It could pop up, pop down, but this 1380, 1350 has been a real resistance level that has held since back here 2014 of March, and it's just been a really sideways mover. I mean, you could say that there's an inverse head and shoulders here, but I'd rather it clear and just get a better pattern. Similar thing is also to Tesla. Tesla's up, but it needs to hold this level, and we want to see if it's going to be a dead cat bounce right now, because you're already 1, 2, 3, 4 into the hole. So I want to see, especially being that you have a bearish candle. Now, they could squeeze people because there's obvious people that might have got in last week, but again, the pattern, I want to make sure that you're not missing that you have this tail above that. Again, I shorted both these moves, and I wasn't going to short this one now because it's just not a good pattern so far. So you have that tail, and you also have this tail that is currently in, but you can see how sideways it is. I'll just wait for something a little bit clearer because, again, if it breaks the 200, they're going to go back to the 140, 120 area. So we'll continue to watch, and don't chase. That's been the theme. Don't chase. Wait for the setup. If you don't have a setup, shoot me a private message and we'll talk about some stuff. But if you do, but you feel like I just need to get into something, use the gold as the example that I showed on the video to show why sometimes you just have to have a little bit of patience and say, listen, I have to get the trade to look the way I want it to go, and go from there. Again, still looking at the DD is still going well from last week. Actually, it's 2 weeks up. I would be locking in profit. I put that one before the move happened on the newsletter. I had it actually this week. And I'm also looking at Walmart as well. It's still hovering around 200 days, so I want to see where that one's going to go. My starter position on that one as well. I did start a small starter position on the SPY for some puts at the close on Friday. So just going to kind of see and put my money where my mouth is and keep, again, in line with position and sizing and risk. Manage risk. The only way you can really know your risk is if you have a target. If you don't have a target, what are you really trading? So if you know your risk and you say, okay, I'm risking $1, I want to get $3, cool. If you're risking $1 and you say I want 70 cents, you don't really have a business. You have something that's going to churn your account. And again, we could talk about that a little bit more in depth. I'm going to do a couple of videos tomorrow about risk and reward. I've done before, but it's really, really important that you guys understand that. And we'll continue to watch how this plays out. So again, take care and trade them well.